Since 1974, Saudi Arabia has spent over $150 billion on U.S. weapons. Why? Because every oil dollar is recycled through America's defense industry. This isn't a conspiracy, it's a spreadsheet. The petrodollar didn't just fund wars, it made war profitable. From Iraq to Gaza to Ukraine, you'll find the same signature: U.S. weapons, funded by foreign oil money guaranteed by the dollar's reserve status. I'm Nate Ledger. And what you're about to hear explains why U.S. military supremacy is inseparable from its currency, and why breaking the system could finally stop the cycle. A crisis, a president, and a quiet deal that changed everything. In 1971, Nixon took the dollar off gold. By 1974, he found something darker to replace it: oil. When people talk about the strength of the US dollar, they usually don't talk about its near-death experience in the early 70s. By 1971, the post-World War II Bretton Woods system was unraveling. Back in 1944, it had made the US dollar the world's anchor currency, convertible to gold at $35 per ounce, backed by America's massive gold reserves at Fort Knox. But by the late 60s, the math was falling apart. The US had spent wildly on the Vietnam War and Lyndon Johnson's Great Society programs. More dollars were circulating globally than the US had gold to cover. Foreign governments, especially France under Charles de Gaulle, started demanding gold in exchange for their dollars. In August 1971, Nixon slammed the gold window shut. No more convertibility. It was called the Nixon shock, and it created an immediate global problem. Without gold, what would give the dollar value? I've gone through the archives. The crisis was real. Inflation jumped from 3.3% in 1972 to 12.3% by 1974. The dollar's purchasing power dropped sharply. Foreign nations started losing faith. Some economists feared the world would ditch the dollar entirely. That's when a plan was hatched, quietly, urgently, behind closed doors. In June 1974, U.S. Treasury Secretary William Simon flew to Saudi Arabia with a classified mission: create an unbreakable link between oil and the U.S. dollar. The resulting deal, formalized over the next year, was simple but profound. Saudi Arabia would price all of its oil exports exclusively in U.S. dollars. In return, the U.S. would provide military protection, advanced weapons, support for the Saudi monarchy's long-term survival. Saudi Arabia would also reinvest its surplus oil profits, petrodollars, into U.S. treasuries and American banks, effectively recycling oil wealth into the American financial system. And just like that, the dollar had a new backbone: black gold. Here's what most history books leave out. This deal was kept secret until 2016, when declassified documents finally confirmed it. The timing wasn't accidental. The 1973 OPEC oil embargo had just quadrupled global oil prices, from $3 to $12 per barrel, crippling Western economies. Washington knew it had to tame that oil weapon. Tying oil to dollars gave the U.S. a stranglehold over both supply and currency flow, and it worked. By 1975, all OPEC nations had agreed to sell oil only in dollars. The petrodollar was born, and with it, a new empire, one built not on gold bars but on oil barrels. In the next chapter, I'll show you exactly how this single agreement didn't just rescue the dollar, it turned it into the planet's most powerful weapon. How oil turned the dollar into a global empire. Oil made empires rich. But in 1974, it made one empire invincible, because it didn't just power engines, it powered money itself. The ink on the U.S.'s Saudi oil pact was barely dry when its ripple effects began reshaping global finance. With oil now priced exclusively in U.S. dollars, every nation on Earth that needed energy, which meant all of them, also needed dollars. But here's the hidden mechanism that made this so powerful. They couldn't just print dollars like the U.S. could. They had to earn them. That meant selling goods to America, investing in U.S. debt, or holding dollars in reserve. This created an automatic demand machine for the dollar, what economists later called the petrodollar recycling system. Let me break it down. Between 1974 and 1981, Saudi Arabia alone purchased more than $100 billion in U.S. Treasury securities, funneling oil profits back into the American economy. By the mid-1980s, OPEC countries collectively held nearly 30% of their foreign exchange reserves in U.S. government bonds. This stream of recycled dollars allowed Washington to run enormous budget deficits without triggering currency collapse. In simple terms, America exported dollars. The world bought oil with them. Then oil exporters recycled those same dollars back into US banks and bonds. It was a closed loop, a self-reinforcing engine, and it handed Washington economic and geopolitical power no other nation had ever possessed. One former Federal Reserve official, Paul Volcker, put it bluntly in 1979, "It is our ability to issue the world's reserve currency that lets us run deficits without consequences." But that's not the whole story. This system also created the financial firepower to build America's modern military empire. Consider this. By 1980, U.S. military spending had climbed to $134 billion per year, more than the next 10 nations combined. By 2000, it surpassed $300 billion. And by 2023, over $858 billion, more than China, Russia, India, and Germany combined. Where did that money come from? Petrodollar inflows kept Treasury yields low, making it cheap for the US government to borrow endlessly, without spiking inflation. Meanwhile, petrodollar-rich Gulf states like Saudi Arabia and the UAE purchased hundreds of billions in American weapons. Saudi Arabia alone has bought over $150 billion in US arms since the 1990s, according to the Congressional Research Service. This wasn't just economic policy, it was the blueprint for modern empire. The dollar didn't just become the medium of exchange, it became the currency of war. In the next chapter, we'll follow the trail of those who dared to challenge this system, leaders who tried to sell oil and other currencies and paid the ultimate price. What happens to leaders who reject the dollar? Two leaders tried to break free from the dollar's grip. Both ended up dead, both after selling oil in another currency. The petrodollar isn't just an economic arrangement, it's a line in the sand. And when a world leader crosses it, history shows us what happens next. Let's go back to Iraq, the year 2000. Saddam Hussein had ruled for 2 decades through war, sanctions, and diplomatic isolation. But in October of that year, he made a move that got little media attention at the time. He announced Iraq would start selling oil exclusively in euros. It wasn't just talk. By 2001, Iraq had converted $10 billion from its UN Oil for Food program into euros. This wasn't ideological, it was economic. The euro had been gaining strength, and Saddam saw an opportunity to weaken US leverage. Now, I'm not here to defend dictators, but what happened next is hard to ignore. In March 2003, the US invaded Iraq. The official reason? Weapons of mass destruction. But no such weapons were ever found. Less than 2 months later, in June 2003, Iraq's oil sales quietly returned to the US dollar. Coincidence? Maybe. But history rhymes. Now let's talk about Muammar Gaddafi, Libya's eccentric oil-rich ruler. In the late 2000s, Gaddafi was pushing hard for a gold-backed African currency that could rival the dollar and euro. He proposed that African nations stop using Western currencies to trade resources. He wanted a pan-African monetary union, funded by Libya's 143 tons of gold reserves. In 2011, NATO launched a bombing campaign over Libya, citing humanitarian concerns during the Arab Spring. Gaddafi was captured and executed on camera in October of that year. That same year, WikiLeaks published U.S. diplomatic cables showing that Washington and Paris were explicitly concerned about Gaddafi's gold dinar plan. According to one cable, French intelligence warned that the plan posed a serious threat to the global monetary system. I remember watching that clip, Hillary Clinton laughing, "We came, we saw, he died." I don't laugh at that. Because when you trace the moves of those who challenge the petrodollar system, a pattern emerges. A deadly one. And it doesn't stop there. Iran tried to sell oil in euros and yuan. So did Venezuela. Both were hit with crushing US sanctions. Not military invasions this time, but economic blockades, cutting them off from the SWIFT system and freezing billions in overseas assets. These aren't isolated cases, they are a message. The dollar is not just a currency, it's a control mechanism. Challenge it and you risk regime change, or ruin. But here's what they don't expect. The cracks are spreading anyway. In the next chapter, we're going to look at you. How this oil dollar system, crafted behind closed doors, has slowly gutted your paycheck, inflated your cost of living, and made financial freedom a rigged game. the invisible price. You pay every day you've never signed a deal with the Saudis, but you're still paying for it every time you buy groceries, pay rent, or swipe your card. Most people think inflation is just part of life. They don't realize it's baked into the system, engineered since 1974, when the dollar divorced from gold and married oil. From that moment forward, the US could print limitless dollars because the rest of the world had no choice but to use them. And if they didn't, well, we already covered what happens to countries that step out of line. But what about you? Here's a stat I think about often. In 1970, the average American home cost $23,000. A college degree, around $1,200 a year. You could support a family on one income, buy a house, and retire without panic. Fast forward to 2023. Median home price, $436,000. Average college tuition, $10,000 to $40,000 per year. And wages, they've barely moved. Adjusted for inflation, real hourly wages in the US have risen just 0.9% since the 1970s. That's not a free market failure. That's the quiet cost of the petrodollar. Because here's how it works. The US prints money to fund military budgets, bail out banks, and stimulate Wall Street. Foreign countries buy oil with those dollars and reinvest them in US assets. That flood of global capital inflates housing, stocks, and healthcare, while your wage, tied to labor supply and productivity, lags behind. In other words, you're competing against foreign central banks for your own home. And the more the Fed prints, the worse it gets. From 2020 to 2021 alone, 40% of all US dollars in existence were created, yet politicians still wonder why eggs hit $6 a dozen. I've had friends ask why they can't seem to save, why their credit card balances keep growing, even as they work harder than ever. And I tell them, it's not your fault. The system wasn't built to reward you, it was built to feed on you. Remember this, inflation isn't just rising prices, it's the stealth tax of empires in decline. And this system, this petrodollar loop, has kept America afloat by quietly draining the rest of us. But it doesn't just exploit your wallet. In the next chapter, we'll talk about what it's doing to your world, how this oil-backed currency system is driving ecological collapse on a planetary scale, petrodollars, climate collapse, and the growth trap. The same system that keeps your money weak is making your planet unlivable, and the more we grow, the more it burns. I've spent years tracking financial corruption and monetary schemes. But nothing shocked me more than realizing this. The petrodollar doesn't just manipulate money, it's locking the world into climate collapse. Let's connect the dots. After the 1974 deal, oil didn't just power economies, it propped up the dollar. So every global transaction, every development loan, every trade imbalance, it all reinforced oil's central role. Here's the hidden logic. To maintain demand for US dollars, the world must keep buying oil. That means no matter how urgent the climate crisis becomes, the dollar system incentivizes fossil fuel consumption, and it shows. As of 2022, nearly 80% of global primary energy still came from fossil fuels. That's despite 5 decades of warnings from scientists, despite the Paris Agreement, despite everything. GDP and fossil fuel use have moved in near lockstep for over a century. Every 1% increase in GDP typically brings a 0.6 to 1% rise in CO2 emissions. That's why global emissions rose more in the past 30 years, despite all our tech, than in all of history before that. I recall sitting with a climate economist in 2019. She told me, "We're trying to solve ecological collapse with an economic system that literally requires collapse to function." At the time, I thought she was exaggerating. Now, I'm not so sure. Let's talk about the growth trap. In our debt-based, dollar-driven system, economic contraction equals crisis. Because when 97% of money is created as interest-bearing debt, standing still means drowning. So governments chase 2 to 3% GDP growth every year just to keep the machine from imploding. That means more roads, more drilling, more extraction, more destruction. This isn't a failure of capitalism, it's capitalism doing exactly what it was rewired to do in 1974, convert oil into financial supremacy, no matter the environmental cost. Saudi Arabia keeps drilling, Wall Street keeps betting, and the dollar keeps flowing, even as the Arctic melts and food systems wobble. The irony? The very system fueling our growth is making the future unlivable. We can't recycle our way out of this, not when the economy is structurally tied to fossil fuels through a 50-year-old pact that's still in force. In the final chapter, I'll show you the paths forward, what it would take to escape this oil-backed loop, and whether we have any real chance at reclaiming money for people and planet. What comes after the petrodollar? This system was built in secret, but it won't collapse in silence. The question isn't if it ends, it's how we replace it. I've tracked this system for years, and the deeper I dig, the more one truth becomes unavoidable. The petrodollar won't last forever. You're already seeing the cracks. China and Russia have begun trading oil in yuan and rubles. BRICS nations are building cross-border payment systems to bypass the dollar. In 2023, the share of global reserves held in US dollars dropped below 58%, its lowest point in nearly 30 years. The weaponization of the dollar, through sanctions, SWIFT restrictions, and asset freezes, has accelerated global de-dollarization. Countries don't want to be punished for disobedience, and if oil can be bought in other currencies, the dollar's global demand engine grinds to a halt. But here's the catch. Replacing the dollar with another currency, whether it's the yuan or a BRICS token, won't fix the core problem. Because the real issue isn't which flag is printed on the money, it's how money is created and who it serves. Right now, over 97% of all money in circulation is created by private banks through interest-bearing loans. It's a system that demands constant expansion, constant profit, constant extraction. That's why climate, inequality, and political instability are accelerating in sync. So what do? Some economists point to modern monetary theory, MMT, and I'll admit I was skeptical. But the more I studied it, the more I saw its potential. MMT says that countries with sovereign currencies, like the US, can never run out of money like a household. They can create money to meet real needs: housing, clean energy, health, climate resilience, so long as they manage inflation by taxing excess, not starving investment. It flips the narrative. Instead of asking, how can we afford it? We ask, do we have the real resources to do it? Materials, people, time? This would mean public banking for green infrastructure, direct investment into schools, not stock buybacks, a shift from oil-backed money to life-backed money. And for developing countries, it means monetary sovereignty, no more IMF traps, no more dollar-denominated debt dictating domestic policy. I remember interviewing an African economist who said, "Every year we export our future to pay for yesterday's loans." That stuck with me. Because whether it's a farmer in Ghana, a nurse in Ohio, or a factory worker in the Philippines, we're all caught in the same system. But it doesn't have to be this way. Imagine a world where money isn't a weapon, but a tool. Where value is tied to human well-being, not oil barrels or defense contracts. Where nations invest in each other's survival, not each other's collapse. That's the post-petrodollar world we could build, but only if we first understand how we got here. If you made it this far, you're exactly the kind of viewer I built this channel for. Subscribe now, because next time, I'm showing you how dollar dominance is quietly unraveling. And what happens when empires run out of oil and credit. Hope you understand. Live well, think clear, and act wisely. Follow for more.